Hi, everyone. Welcome to our webinar, Government Programs COVID-19 Update to the Canadian Emergency Wage Subsidy, as well as some really big announcements this morning. I'm going to give it, I see there's about 50 people on, and there's more coming on here by the moment. We're up to 60 now, so I'm just going to give it a moment to let people join, and then we'll come back to you. So just give us a minute or two here and let people catch up. Thank you. All right, I think we'll get going. So I just want to point out that over on, well, it's on my right. I'm not sure how it looks on your end, but there is a Q&A box there, so you guys can type your questions in there. I'm sure you have lots about some of the announcements that have been made today, as well as the legislation that was released over Easter weekend. My partner, Carol Sadler, and I have spent a good amount of time going through and dissecting the legislation, and so we've got a pretty good understanding of it. But I got to pre-warn you that it is incredibly complicated, and so we'll do our best to make sure that we are representing it effectively. And also, there was some really big announcements today, just now by the Prime Minister, that I think we'll get into those first, actually, because I think a lot of entrepreneurs will be greatly positively impacted by today's announcement. So opening remarks, everything's sort of a moving target right now, so we're going to try and give you good information to the best of our ability, but there's our disclaimer. All the government programs, of course, and we're trying to keep our blog up to date as announcements are made and as laws are passed, so feel free to check out our blog. And if you just go to aikenhenderson.ca/blog, you'll see a resources for small businesses impacted by COVID-19. So let's just get into today's announcement, which is really at the bottom. So I think everybody's likely got a pretty good working knowledge of the CERB program. And one of the biggest flaws in the legislation that was passed a couple of weeks ago was that you had to have ceased working. Well, show me an entrepreneur who ceases working for any reason. I think that this should have been a pay test. Ceased being paid would have been a much more effective test at the time. The government has recognized that, or at least Prime Minister Trudeau announced this morning that if you earn $1,000 or less, you will be eligible for the CERB. I've got in brackets there owner managers, but of course it will apply to a broader subset of people. And so, he pointed out seasonal workers whose jobs aren't coming, and another one that you're going to be eligible to apply if you've run out of EI since January. And so this covers a lot more people, in particular the people at Aiken Henderson that we were worried about, and certainly that we have been talking to tons about this stuff over the last couple of weeks. Terrified business owners going, great, well, I'm trying to I'm working through all these rules. Just reading the rules is considered working and how they apply to my business. So of course I haven't ceased working. Help is on the way. Again, this has not been announced into law. However, the Prime Minister was pretty clear this morning that if you earn up to or $1,000 or less, you'll be eligible. So whether that means you can go and apply right now, I think there's a pretty good chance that you can. In terms of what periods you'll be eligible for, whether it's retroactive to March 15th, we don't have any of those details yet, but I imagine that we probably will by the end of the day. So keep an eye on the government's website for updated stuff on the CERB. It might, in fact, it might already be up there. I haven't, that this announcement was made moments ago, so half an hour ago, so I haven't had a chance to fully go through and dissect it. So go check that out. So that's the CERB. And then the other thing that he said that's really going to help a lot of our clients, particularly, well, anybody paying commercial rent. We've got a lot of optometrists paying commercial rent. We've got restaurant clients who are paying commercial rent. We've got construction clients that are paying commercial rent. I don't know what this means. But Trudeau announced today, Prime Minister Trudeau announced today that help is on the way in the coming days for businesses who are worried about paying commercial rent. Again, no details yet, but it gives some indication that something is cooking in the background. And presumably, it now being April 15th, those changes hopefully would be in place. I would hope for May 1st when rent becomes due. And Carol, jump in as you want here. You're on mute though. My thought is the government first moved to sort of deal with the biggest line item on most people's P&Ls, which is generally salaries. And now, maybe there's going to be an announcement to help people deal with their second biggest line items, which is, a lot of the time commercial rent. So. You there, Carol?
I am here and unmuted. Thank you. Thanks, Clay. No, that's a welcome announcement. I'm waiting for the details as always.
Yeah, no doubt.
But we've got a promise. We'll see what happens there.
Okay, so moving on, let's get into these wage subsidies. So nothing has really changed since the 10% wage subsidy was passed into law. If you attended one of our previous webinars, which there's a good chance you did, I had some question that the original wording that the Prime Minister used to introduce the 75% wage subsidy sort of indicated that it was replacing the 10% wage subsidy. That is not the case. In fact, the 10% wage subsidy is still around. So, Carol, why don't you jump into describing the 10% wage subsidy here for a second?
Will do. It's a good refresher in case you haven't heard or you're still wondering what happens with that. Easiest thing to know about the 10% wage subsidy is it's a reduction in the amount you send in payroll taxes or remittances to the CRA. No application, nothing else to do, nowhere else to go. You figure out what your subsidy is and you reduce the income tax portion of your source deductions to CRA. Can't reduce if your subsidy happen to be more than the tax, you're limited to that. You can't reduce CPP and EI. It is limited per employer, $25,000 for the whole program, March to June, $1,375 per employee, and that's probably a lot more germane. So if you've got a couple highly paid employees, you might run into your $1,375 fairly quickly. Another check you've got to make is that your corporation was eligible for and at least claimed $1 of small business limit in the last taxation year, so presumably 2019. If you were allocating between a group of companies, you should have had. And I guess the question then becomes, is it possible to go make an amendment to say, hey, even if I gave all of my limit to another company, can I go get $1 or a few dollars of that? So you had to have claimed small business deduction.
So yeah, just to put some meat on the bones there, we had a group of companies that we work with that had a September year end, and we hadn't yet we were pushing the deadline because they actually ended up very busy because of the pandemic. And the filing deadline was March, and we typically allocated 100% of the small business limit to their management co, their top level sort of management co. And in order to, going back to this story, sorry if you've heard it before, but what we did is we went to the other operating companies that had salaries and allocated $1 of business limit to each of them, and that made them eligible for this program. So, I guess a question, Carol, is if I'm claiming, why on earth would I claim a 10% wage subsidy when there's a 75% wage subsidy?
This was available first. Before the details of the 75% were announced or made more clear. Plus the when it was particularly 30% drop year over year was the qualification for the 75%. That's a test that some people couldn't meet, even in financial difficulty. That just wasn't a test that was meetable. So the thought was get the 10% while you can. Now, if you do qualify under the rules have been announced, the legislation released over the weekend, if you qualify for the 75%, go and get it. You'll if you've already claimed the 10%, you'll reduce your 75% by that 10% amount. So it's easy to claim.
Yeah.
Get it while the getting's there.
Yeah. And Tax Templates has published a calculator to help you calculate your way through this. Most payroll providers have already caught up to this one, and you can just toggle it on if you're on a payroll provider. The 10% is really designed for small companies who have not had the revenue declines that would make them eligible for the 75%, in short. So in terms of the 75%, let's get into this now. Instead of typing out a big long set of slides, I'm just going to go to our blog because we've actually updated it for the changes. So here it is, and you guys can follow along here or go read along on our blog, whatever you prefer. So a couple different pieces of this. So the bones of this, really, if we go high level, this is designed for employers of most any company, really. There's a few exclusions, but most any company, doesn't matter your size, who have had a drop of revenues of 15% in March or 30% in April and May can apply to have a good portion of wages reimbursed in order to keep their employees on staff, not have them go into the EICERB system, and to basically keep the relationship with your employees going good. And so who qualifies for this? Well, you don't have to be a corporation. You could be an individual. You could be a partnership, an NPO charity. As long as you have salaried staff working for your entity, then you would qualify. Public bodies are not eligible, and you have to have had a payroll account active on March 15th. So if anybody's thinking about switching to payroll now, and you didn't previously have a payroll account, sorry, it's too late for that. And if you did receive, as Carol mentioned, if you did receive the 10% wage subsidy, that will reduce the amount that you'll receive under the 75%. If you're not eligible for the 75%, you may still qualify for this 10%, so just go and take a peek at that. An employer cannot claim the CEWS for a week, for any week that falls within a 4-week period that an employee has claimed the CERB, right? And it works vice versa as well. So you can't have a double claiming. And in order to be eligible for reimbursement under the CEWS, and we'll talk about claim periods in a second, you had to have paid your staff for 14 consecutive days during that claim period. And so there's 3 different claim periods, and we'll talk about that in a second. So, a very common question is what happens when I laid off my staff, they became eligible for the CERB or EI and then the CERB, and now I'm going to recall them and retroactively pay them back to March 15th to become eligible for this benefit. The answer is I think you can do that. There's a mechanism there to do that. The unfortunate part is if they've already received benefits under the CERB, they may have to pay those back. So you're really going to have to look at how the two interwork and who's received what, and your staff might have to repay some of the CERB that they have received in order for you to qualify for the wage subsidy. There's no mechanism currently that I'm aware of. I haven't seen anything pop up since the legislation was announced to basically say, no, I've changed my mind on this CERB and I would like to send it back to you, to the government, because I'm getting paid by my employer. So I think that by the time this program opens up, hopefully that question is ironed out. So I mentioned before that you had to have a drop in revenues, and so during March, it was originally supposed to be 30%, but since we only sort of shut down the economy halfway through March, they've dropped it to 15% for March and 30% for the following 2 months. The other problem, which I'd argue is still a problem, I think a revenue test in any level is a bad idea, and there's a number of reasons for that, and we could get into that, but and maybe we will a little bit. But before, you had to compare it to the same month from 2019. Well, we had a client who moved their head office in March of 2019, so they had very low revenues during that month, and so they probably wouldn't be able to have shown at that time a 30% decline March to March. So that's a scenario. And what about startups who just began operations, say in November or December? What about a company who had rapid growth during the latter half of 2019 and then just had to lay everybody off, but their revenues were still ahead of March of 2019? All these scenarios prompted the government to sort of say, okay, you can either compare to the same month of last year, 2019, or you can take an average of your January, February 2020 revenues. So that's better. That catches more people or more companies, more employers. However, it's still problematic. For example, I spoke with a professional services firm yesterday who just acquired their business in January, and March is their busiest year yet. The business that they acquired definitely had operations for several years, but it was an asset deal. And so all the staff stayed and the business was substantially the same as 2019. And they could have showed a comparative drop compared to 2019 in revenues, but it was a new business that he bought it with, a new corporation, new payroll account. And so that entity isn't a qualifying entity to look back to 2019 because there's no history in 2019. And, certainly his March has been busier than January and February average because he just got going. So the revenue test is problematic at best, and devastating at worst for a lot of private companies. If I'm thinking of accounting firms, for example, a lot of us are probably okay right now. We're always the last ones to get hit by a downturn. People still focus on getting their taxes caught up. But hey, when it's time for next year's taxes, that's when we really feel the pinch. And so I'm not saying that we're going to get hurt by this. I'm not really sure. We're still thinking about that on the back end, but it's another example of where a short-term revenue test has been problematic. Do you have anything to add to any of that, Carol?
No, you've covered it. You've covered it pretty well. I was really glad to see the January, February test come in. That's a bit of a help. Sadly, we're stuck with the revenue test that we have to work with, and that's fact.
Okay. Well, more good news about the revenue test is the government has allowed you the ability to select cash or accrual methods. Broadly speaking, almost every taxpayer in Canada, every corporation in Canada, unless you're a farming or fishing business, you're expected to report on the accrual basis, Carol. And so, why don't you talk a bit about this announcement?
This could be a help. Accrual, as you all pretty much know, means looking at what occurred in the period. Maybe you didn't get paid, but you billed. And I've certainly heard of that from some people saying, yeah, I had great billings in March, and my customers now saying they're not going to pay it. So accrual can be problematic in that sense. So the legislation added the provision that the company, the entity, could elect to use the cash method, which is, as it says, when did you get the cash? Can't use a combination of both. Your entity has to select a method when you apply, and then you remain in that method throughout the claim period, throughout those months. Right now we've got 3 months of program. It could be extended. We'll talk more about that later. Cash method normally is available only to farmers and fishermen. There's specific procedures and a specific election as it stands normally under the Income Tax Act for that. And right now, the legislation simply says employers can select a method and elect. We don't quite know what that's going to look like because details of the application process for the 75% benefit are coming, but know now that that's something to look at. To look at your revenues, look at whether a switch to the cash method might be more beneficial if you've got a revenue test problem.
Yeah, thanks, Carol. I mean, another thing that they announced, you know, that the actual there's sort of a little bit of a definition of revenue in the legislation that says, you know, cash, receivables, or other consideration. And so, you know, things like, you know, I've heard it said that things like work in progress probably wouldn't be included in there. And so I guess the point on this is for calculating revenues, you've got some flexibility. Once you pick a method, you have to stick with it. And certainly if you change your method, you're going to have to apply that same methodology to the comparative period, whichever comparative period you choose. And so, you know, very complicated stuff, but it is intended to create some flexibility and catch more people, I believe, which is good. So, and then they say, you know, extraordinary items is excluded. Extraordinary items, unfortunately, isn't defined in our tax system, but generally accounting principles would say it's, you know, abnormal events that are not related to normal business activities that aren't expected to recur, you know, earthquake, act of God, whatever. So extraordinary items would be excluded. But again, we have no idea what that means. So, yeah. Okay, so there's very detailed rules about how to deal with corporate groups. For example, if you report on a consolidated basis, you can have the option to use your consolidated revenues and apply that throughout the group for the purposes of applying for this, or, you know, you've got some flexibility to look at an entity by entity basis, even if you normally report on a consolidated basis. So, you know, kind of following the tax rules, I suppose, in terms of reporting revenues, because you would do that on an entity by entity basis, right, Carol?
Yes.
Yeah. And so anyway, so there's some, and then how partnerships work and how to determine your revenue declines on a partner by partner basis if you're a member of a partnership, and what happens if you're earning revenue from other sources. There's very specific rules in there about that. And so what are the qualifying periods? So now the qualifying periods are the periods where you're able to, you do a revenue measurement for the month, and these are the periods that you're able to apply for a wage subsidy for. So the first period runs March 15th to April 11th, and that is measured by looking at a decline of March 2020 either to March of 2019, or your average of January to February. Your second period would be April 12th to May 9th. So we're in that period right now. We're in the second period, and that's an April test, and there's your May period. And so you have to apply for each of these periods individually, except for they made an announcement in the legislation that once you apply for the first period, you're going to automatically apply for the subsequent period. So if you apply for period 1 and you qualify, you're going to automatically be in for period 2. If you apply for period 2 and qualify, then you're automatically going to apply for period, or you're automatically going to be approved for period 3. Did I say that right, Carol?
You did. You did. Yeah. No, that was a welcome announcement.
Totally welcome announcement. And so, you know, one of the things about the income levels too, well, we'll get into that in a sec. We'll get there. How much benefit do you get? And so this is sort of the old wording from the announcement last week, but I went through it and I still think it hangs compared to the legislation that was announced. You know, you basically, if you're, let's just talk about arm's length employees, so not owner managers, family members of owner managers, etc. You're going to be eligible to be reimbursed for 75% of the remuneration paid up to a maximum of $847 a week, or the total amount of remuneration paid up to a maximum of $847 per week, or 75% of the employee's baseline. So that it introduces this idea of a baseline remuneration test. And so we'll get into the baseline remuneration test, but basically what this is doing, it's a sort of an or test, an or test. If you have the ability to top your employee up to their baseline remuneration, then the government will reimburse you maximum 75% of that, up to $847 a week. If you don't have the ability to top your employee up, you can drop them to $847 a week, or 75% of their baseline remuneration, whichever is less, and the government will fully reimburse you for that. So we'll talk about what baseline remuneration is in a minute, right now. So basically, baseline weekly remuneration is the average remuneration that you paid between January 1st and March 15th. And it excludes any 7-day period, which there was no pay. So you got 10 weeks there. If somebody was on holidays for a week, didn't get paid, you'd average it over 9 weeks, whatever they were paid. And so that's the baseline remuneration for the purposes of these calculations. And so eligible remuneration for these purposes is normal stuff: wages, salaries, commissions. So really for commission employees, I know we've probably got a few of our hair salon clients on the line where all their staff earn commissions. This is how you would calculate how much you're going to be reimbursed for putting them back on salary, and frankly, how much to pay them going forward now that they're obviously not earning commissions because your salons are closed. It doesn't include things like severance, stock options, personal use of a vehicle. I mean, that seems pretty obvious to me. There's no upper limit on the amount of the subsidy that a single employer can claim. And so now you've heard companies like Air Canada recalling 16,000 employees plus, WestJet's doing the same thing. And so this isn't designed for tiny private companies. This is designed for everybody who is an employer, basically, with some exceptions. Mm-hmm. So they really want you to top up to baseline levels. And by the way, I've got a note here, another announcement that was made. Carol, why don't you talk about this one a little bit?
The refund of employers' portions of withholding. So if you've topped up someone or have been keeping them on salary, but they're on leave, they're not working, they're on leave, they're still being paid, you will also get a reimbursement of 100% of the employer paid CPP and EI and Quebec pension plan as well. So the employee must be on leave for that time. They must not be performing any work for the employer in that week, and that's not subject to any limits. So if here's a scenario: you've got a couple people, you've got no work for them to do, but you've got the ability, or you've made the choice to still remunerate them, and I've seen that in some small businesses, and definitely a lot in parts of the retail sector. You, the employer, get a reimbursement of the CPP and EI. That's part of this program. We'll talk about how you apply later. Just know that that's also separate from the 10% wage subsidy we talked about later. It's part of this emergency wage program, and it'll be part of this application.
Perfect. Yeah, thank you. So,
and no limit on that, by the way, just a note that, John, no limit on that either, which is great.
Yeah, that is awesome. Just give me a sec. I lost my screen here.
Here.
Sorry, guys. There we go. Okay, so what happens to you owner managers? So I guess the first thing that has been on a lot of people's mind is, well, let's just go back and get me on salaries. Today's the deadline for a March withholding submission. And so let's just go back and get me on salaries so that we're eligible for this. Even though I've never really paid salaries, etc. I would be very careful with that. I would be very careful about going back and changing a fact pattern to suit the needs of this. And we'll get into the penalty provisions of these rules in a bit here. But who is eligible? Well, owner managers, non-arm's length employees, their families, etc., who are eligible for the program would be people who have been receiving remuneration during the baseline measurement period. So that would be January 1st to December, to March 15th, sorry. And so if you've been receiving that, then you're eligible to continue receiving that. And how much would you get? It's a fairly similar calculation. And so, you might consider cutting your pay if you need to down to the limits that are going to be reimbursed. Here's what's unfortunate is employers who have been who have stopped paying themselves in order to pay their staff are going to have reduced eligibility to this program for a number of reasons. One, if you stop paying yourself, say in February, it's going to reduce your weekly amount that you're eligible for. And furthermore, if you stop paying yourself in March, you need to have been paid for 14 consecutive days during a claim period. And if you didn't get paid during that claim period, there's a problem there. And so you need to think about that. So there's some analysis that goes in there. Talk about complicated. This is another area that is incredibly complicated. There's probably some questions. I haven't checked the Q&A here, and I promise I will get to them, guys. Carol will get to them as well. For people who've been paying themselves dividends and not previously salaries, yeah, you're totally out of luck on this one. For yourself, if you've been paying yourself dividends and your staff salaries, you may be eligible to claim the CEWS on their salaries. And so, you're also sort of hooped on this should say CEBA, sorry about that. But you won't be eligible for that either unless you paid $50K in salaries to other people last year. There's some wording in the legislation that makes it taxable income. The government has put rules all over the legislation that give them the ability to extend this past March, April, May, June, into June, and I think right up to the end of September. So they've dropped in sort of open-ended clauses that refer to prescribed this and prescribed that, that they can go and insert a regulation to allow them to extend the program. How to apply? Well, as of the weekend, they were saying 2 to 4 weeks, but this is a moving target depending on which minister you ask on which day. Understandably, this is a massive program, and it is going to be incredibly hard to administer and audit and all that. And so, yeah, it's going to take a while. My suggestion would have been use one of the really great options out there to make this a simple program and get money rolling right away. Unfortunately, I'm not sure that's they chose to do something else. So that's not what's happening here. That we're having to wait. So many employers who do not have the capital or access to capital or lines of credit or whatever to bridge between now and whenever this money comes through, they're just going to lay people off, and that's just how it's going to be. So there's nothing we can do about that if you don't have the capital to pay, period, in the meantime. The trouble is that puts the ones that do it a pretty big strategic advantage in my mind, because they're able to retain their staff and potentially, anyways, hire yours. So that's another problem with this. So penalties for gaming the system. There's a particular penalty that's been introduced now, 25%, for any company that's artificially inflating or deflating revenues to become eligible for the program. So this includes creating an event or series of transactions where it's reasonable to conclude that the main reason for that event or series was to cause eligibility in the program. So in a nutshell, make sure that your revenues are defendable. There will be an attest when you apply for this, and the attest is, the law basically says that the attest is going to require you to understand all of this law, which is going to be virtually impossible for most private company owners. So that's pretty unfortunate, but I don't think that the government's out to get anybody. I think they're, generally here to help. So hopefully, they won't be mean-spirited about applying this penalty if somebody has miscalculated something. And then, of course, if you make a false or misleading statement in that attest, you could be subject to up to a 200% penalty and up to 5 years in prison. And so that is the Canada Emergency Wage Subsidy. And then the business account. Let's just talk about this briefly, and then we'll get into some questions. So the business account is the $40K government loan opened up. Applications for it opened up last week. You have to be an operating company registered in Canada, payroll between $50K to $1 million last year on your T4 summary. And so if you're a sole operator paying yourself dividends and you never paid yourself salary in 2019, you are absolutely not eligible for this loan. It's accessed through the bank that holds your operating account. It's interest-free for a year, and if you pay it off by the end of 2022, $10K is going to be forgiven. 25% of this loan will be forgiven. The application, I can tell you, is very, very easy. Generally speaking, it's an online form through your bank. They go through a bit of check on the back end. In some cases, they want you to submit your T4 from 2019. And, I've seen people getting approved within a couple of days. And I haven't seen any cash deposits come through yet, but I have seen approvals, and the cash deposits are supposed to follow fairly quickly. If it cannot be repaid by the end of 2022, it converts into a 3-year term with 5% interest. Go and apply for this loan. You know, if you end up paying it off by 2022, there's 10 grand free in addition to some interest that you've saved over the next year. And if you can't, then it converts to a loan with, you know, frankly, not bad terms given what's going on here, and the fact that you know, a lot of businesses wouldn't otherwise be eligible for any capital, any additional capital, if it weren't for the government backing. Carol, do you have anything to add to that? Carol, you there? Okay, I'm not sure what happened to Carol, so I'll just keep moving here. Let me just re-invite her. Okay, so we've got some, you know, the emergency isolation support from my previous, from the previous slides, that's closed as of last week, and we've got some tax deferral stuff. So I think, you know, we can go through all this, but a lot of you will have already seen this. So I think maybe let's just dive into some questions now, because I'm sure there's tons. So here we go. We got 15 questions. Awesome. So we'll get into this in order. What is available for those who remunerated with non-eligible dividends? Okay, so originally, and Carol, feel free to jump in whenever you like. Originally, Carol's having trouble connecting. Sorry about that. The CERB was not available to anyone who didn't receive 5K in salaries, but that has been opened up on a government website. On the government website now, it says that if you paid yourself 5K in non-eligible dividends, you will be eligible to receive the CERB. I haven't seen a change in law come through on that yet, but it is on the government website, so I think it's pretty safe to say that if you receive 5K in non-eligible dividends, you can apply on that basis. The second part that was problematic with that rule is owner managers work all the time. They don't stop working for any reason. Even if their business is shut down, they're working, and you know, that's just how it is. And the legislation for the CERB said that you had to cease working, which is virtually impossible for owner managers. So today's announcement by the Prime Minister that they were going to extend that to owner managers who were earning up to, well, anybody who was earning up to $1,000 a month would be eligible to apply for the CERB. So this would really be what's available to those people, provided that your dividends don't exceed $1,000 a month. You know, basically during, I assume during the claim period, but we need to see the legislation to know when you're earning that $1,000 a month. Hopefully they're not averaging it over the last year or anything like that. I am an owner manager of a prof corp and take irregular draws from the company. However, made regular monthly remittances to the CRA make regular $5,000 monthly remittances to the CRA via an RP account and mark the full amount as salary and receive a T4 for that. Would the CEWS cover 75% of the max wage? Yeah, I mean, generally, I mean, if you're sending in remittances and it's landing on a T4, then you know, I think that if you are making entries to your shareholder loan instead of receiving cash for your salary, and you're making the regular remittances, and that's landing on a T4, and you're following all the rules that would relate to salary. Carol, I want your opinion on this as well. But I think if you're doing that, basically you're taking a shareholder loan in lieu of cash. I think you're going to be okay on that. As long as the remittances and the T4s are being done properly. Carol, you're on mute. You're on mute, Carol.
Apologies all. Bit of technical issues there.
No problem.
Back on
flip
now.
Flip your camera around too, if you don't mind.
Yeah, I had to put myself totally get out again.
So on this question,
yeah.
they regularly do $5,000 monthly remittances on the payroll account, do a T4 for themselves. They don't always take the cash. Do they qualify?
My feeling is yes. If you've it's been Revenue Canada's theory in the past that if you have submitted source deductions, you intended that item to be cash wages, payroll to you. If for some reason you didn't take the cash, I think it's looked at as you meant to take the cash, give it right back to the company as if there was, say, an exchange of checks. That's maybe more than you wanted for an explanation. But
no, I think we agree on that. So short answer, yeah.
Yeah, short answer, yeah, but that's how my thinking got.
Okay, less than $1,000 a month. Who's that going to help? I have staff who have reduced hours by 50%, but they're still not eligible to apply. If your staff are earning more than $1,000 a month and they're down to reduced hours of 50%, I would really, yeah, they're definitely, the CERB would not be the ideal solution for them. I think the Canada Emergency Wage Subsidy would be. And so, in that case, I think you would consider looking to the CEWS rather than the CERB. Jim, hi Jim, $40,000 interest-free loan. I have 4 staff as independent contractor and they receive a T4A, not a T4 as requested by the government. Correct. Yeah, you need to put them on salaries if you want to be eligible for the interest-free loan. That's pretty clear. And again, yeah, I think we've said quite a bit through the presentation that they're looking for salaries in 2019. So sorry, Jim, you're out of luck on the 40K so far. 75% wage subsidy isn't available. Government says soon. Any known dates? Yeah, moving target 2 to 4 weeks as of Saturday, depending on which minister you ask. Would a joint venture also qualify? Great question, Craig. Carol.
The short answer is yes. There's some fairly complex rules in the legislation that says who in the joint venture and with what revenues are there. But I'll give you a short yes for now, and we're always available for the details.
Yeah, sounds good. There is very specific legislation. There are specific provisions in the legislation, Craig, that apply to joint ventures. So yes. Yeah. What is extraordinary items to be excluded from revenue? Asking if companies had a major drop from their normal business activity, food and liquor, but have replaced the revenue by selling hand sanitizer. Great question, Jason. Can we call the hand sanitizer extraordinary items? I don't think so. I think that would, I think that my thought on that would be that that's considered to be your new normal revenue, and well done for replacing your revenue streams. I think that that's a big win for you. Carol, do you have any other thoughts on that?
I'm with you on that one, Clay. Extraordinary tends to hold the connotation of a one-time windfall or unusual type of event, and that to me just points out. I was going to call it a flaw in the government's thinking or legislation. Maybe I shouldn't be that strong, but there you have it. With ingenuity, managing to fund another business line and make some more money means you may not be eligible. That's unfortunate. We'll just leave it at that. You've some brilliant thinking, some stepping in.
Well, and I think one of the characteristics of extraordinary is it's not going to carry on, and presumably you could carry on in the hand sanitizer business if you're doing really well at it, right? So I own a business and I'm paying myself, but my business has no income. I am simply paying out of savings. Must I lay myself off to qualify for the Qs? There's my initial thoughts is if you lay yourself off, first of all, you can't technically lay yourself off and be eligible for the purposes of EI anyways. And if you're not actually employed by the company, which I'm not sure how you would do that if you own the company, you wouldn't be eligible for the CEWS anyways. Good news is if you've been paying yourself by salaries instead of dividends, you will be eligible as an owner manager for the CEWS. Do you have any other thoughts on that, Carol?
No, I really don't have anything to add on that one, Clay. Okay. I think you've got that. Thank you for.
Sounds good. Okay, well, I'll put this one to you then, Carol. How do you think this works for hourly employees? We are paying staff their full hourly wage, but they are getting fewer hours. Does 75% mean 75% of their hourly wage or 75% of their average paycheck before business decline, which I'm assuming this person would be meaning the baseline remuneration.
Yeah. I'm going to parse the legislation and think on that one there. So you're paying full remuneration. So 75% of that remuneration up to the max per week, $847, or if it's greater, and so I guess we get into some math now, but it seems, because the second test is so 75% of what's paid, or the amount paid, or 75% of baseline, whichever is less, the total of those. But what I'm hearing here is you're still paying, it's what you pay. What's the remuneration paid? Let's cut to the chase there. And you're paying the full wage. So that's the amount that should be eligible for the 75% benefit.
Right. So I think, he's paying the full hourly, but they're getting fewer hours. And so the calculation on this, let's just call you anonymous, would be 75% of what you're actually paying, or $847, whichever is less. Now, if you want to put those staff back up to their pre-crisis remuneration, you can do so and be reimbursed for 75% of that amount, even if they're not working the hours, or $847 per week, whichever is less. So, you might want to consider bumping their hours back up to get them up to that $847 a week, and you'll be reimbursed by the government.
Now, now you also need to look there at the baseline, but if there's less hours, your baseline should be greater. So I don't think you're going to have a limitation there.
Exactly. Okay, so Carol, I'll put this one to you. Do I have to qualify for period one if you don't, do I have to apply for period one if you don't qualify in order to apply for period two?
No, my understanding, well, no.
That one's pretty
period two.
Yeah, apply in period two. At this time, I have no payroll as our shop and mall is closed. It is retail. As I missed your beginning, would I apply once my shop is open? Would I be eligible for the benefit? Could be a month. I think the answer to that one is no. You can rehire all your staff today, pay them retroactively to March 15th, based on the numbers of the eligible CEWS reimbursement. You could, if you can't afford to pay them anything, then you could go down to, for example, if $847 a week, and provided that that is less than their baseline remuneration, you would be fully reimbursed for it. So if their baseline remuneration is less than $847 a week, then you rehire them, put them back to their baseline remuneration, you'll be fully reimbursed. I don't know if that answers your question or not, but I think that that's, you don't have to wait to open again. This is intended to reimburse you even if they're sitting at home doing nothing. Okay.
Agreed. Yeah,
so we're back to Jason here. He's got a follow-up question. So to confirm, if employee makes more annually than $847 a week, this benefit tops at that max level per employee, correct? Yeah. Yeah, that's absolutely correct. So if you don't have cash to top them up to, so if somebody's earning $100,000 a year and they're doing nothing and you don't have $42,000 to top them up, averaged over a year, we got to bring that down to months. But the idea would be offer to drop their pay to $58K during this period. So the $847 a week, and the government will reimburse you for that, Jason. I incorporated in Jan 2020, didn't pay myself until February, so I only have pay for February 2020. Would this make me eligible for the CEWS, or am I to compare my income as a sole proprietor from 2019 to my income as a corporation in 2020? Great question. Carol, do you want to try this one?
I will, but I'd like you to.
I'll jump in, sure.
I'd like you to jump in.
So I incorporated in Jan 2020, didn't pay myself until February. Great. So your baseline remuneration is going to be calculated on the weeks that you were paid. So February to mid-March will be your baseline remuneration. You are eligible for the CEWS, provided that your average revenue from January and February is 15% higher, or March is 15% lower than the average from January, February, and that April and May are 30% lower than your average from January, February revenues, you would qualify for the CEWS, provided that you've got yourself on payroll and you're not paying yourself dividends.
Thanks, Clay. I really wanted to parse through the what was catching me on that was thinking about the January, February remuneration versus March, April, May.
Sure.
That's going to be the qualifying test in this circumstance.
How will the attempt to pay employees 100% rather than 75% be adjudicated? Okay, so that depends how much they're making. If they're making under $847 a week and you're paying them 100% of their baseline remuneration, you should be fully reimbursed for that. Sorry, is that right, Carol?
The max, I think so, because the max is $847 a week, and 75% of the remuneration paid up to $847.
Oh, sorry, no, that's not correct.
Yeah.
If their baseline remuneration was less than $847 per week, you'll get 75% of whatever you're paying them. If the baseline remuneration was, more than, basically grossed up to 25% more than the $847 per week, basically, you would get the $847 per week, and you're out of pocket for the top up. What was also announced today is that if they're sitting there on leave not doing anything, you're going to get your company portion of source deductions back as well, where you would normally be paying those if they're actually still working during the week. I hope that answers your question. For the payback, can you do a lump sum just before it's due in December 2022 for $30K and still benefit from the $10K relief? Yeah, I think so, as long as you've been paying the interest along the way. I didn't see any in the applications that I've seen, I didn't see any requirement to make, I don't think it gets termed until 2022. So I'm assuming that I don't think there's any principal repayments until 2022.
That's what I've seen. Now, we've seen limited things coming back from the banks, but that's what I've seen claimed. So that was my understanding. I mean, I guess one could make other payments, but it seemed there was no requirement to in what I've seen. So my thought on payback was exactly that, 30,000 on or before the day.
Right. Okay. What criteria would you not be eligible for the $40,000, Carol? The prior year salary is the big one. So we've got operating company, and then prior year's total salaries, total remuneration. So that's in 2019 of under 50,000 or over $1 million. Over 50,000 or under $1 million.
Sorry, you're not eligible.
Oh, not eligible. Yeah, under 50,000, over $1 million.
Negative in there. Sorry, folks.
No, you were right.
Yeah. No worries. Yeah. Hey, negative, positives. Gotta be clear in it. So yeah, less than 50,000.
Jim asks, will we still be eligible for the 75% subsidy if we are still working? Absolutely.
Yes.
Yeah, it doesn't, whether or not you're working does not determine your eligibility for the 75% wage subsidy. You don't have to, it's not like Denmark's program where they're paying people to sit at home. This is, the Canadian solution is working or not. If you meet the revenue tests and you meet the other tests, which doesn't include working or not working, you're eligible. The only difference that I see between working and not working is the refund of 100% of the company portion of source deductions if you're not working during the week. Would you agree with that, Carol?
Agreed.
Okay. Coincidentally, I don't have a payroll account set up to pay myself until February, and my only other payroll to myself is for the month of March. Till that point, I was only drawing dividends. Will I be eligible? Yeah, that's a good question. That's a good question. I guess it depends when in March you paid yourself. If you wrote yourself a check on March 31st, probably not. And so, if you're going through and making retroactive journal entries to sort of make it look like you got paid in early March, now you might be considered to be gaming the system. And so there's usually an audit trail as to when journal entries are made and whatever. And so, you'd want a pretty well documented, you really want to watch out on that one. You need to be able to prove that you received a March 1st to March 15th pay run in order to be eligible for the CEWS. And if there's any doubt there, the penalties are pretty heavy on this one. So
one thing I might chime in there, that's very easy for CERA to check in the 75% benefit rules is must have had a payroll account active on March 15th. That's
I think in this case they would.
So if you did have that, that's what I'm hearing in the question.
Oh, so only paid myself is for March. Yeah, if you had the payroll account active, correct.
So yeah, the issues, yeah, if you started your, oh, I'm sorry, I didn't mean to interrupt. What I'm seeing, and I've had this question, yeah, if you started registered your payroll account in January, February, first few days of March, I'd worry, but point is you had it before March 15th, you're good. Then the question is what pay did you have and what's your baseline remuneration now into calculations. So,
right. And can you prove that you paid yourself before March 15th?
Exactly.
You know, or can they disprove that you did?
Mhm.
And so that you know, that's a touchy one. Okay, one of my companies owns and manages an apartment complex. The 104-year-old building was undergoing $1 million renovation. We had employed 25 contracted employees to do most of the work not done by contractors. As they were not issued a T4, and my T4 sum for the company is 0, will the company be eligible for CEBA? So you used the word, we had 25 contracted employees. If they were contracted employees in 2019, and employees is a specific term, you should have issued them a T4. And so if they're contractors, they're contractors. If they're employees, they're employees. They cannot be both. And so if they were in fact employees, you had a duty to issue them a T4, and then you would be eligible for the CEBA. And so that's my answer. And it says now or in the future, well, only if the T4 was issued in 2019.
You need that.
Yeah. I have just remitted my payroll deductions based on the 10% guideline. How do I go back and do under the 75% since I do qualify now that it is 15%? I'm assuming you mean in March. Great question. You'll be able to apply for the CEWS, the 75%, and whatever amount you receive will be reduced by the 10%. How that looks, I'm assuming that you're going to have to tell them somehow, because I don't think CRA is going to know how much you shorted in your remittances until, you know, the reckoning at the end of the year. And so you're probably going to have to keep track of that 10% that you claimed. And I'm assuming there will be somewhere in the application form for the 75% that says I have received X under the 10%. You'll have to enter that amount in, and it'll reduce the amount that you'll receive for the 75%. Question for the CEBA. If a business has more than $1 million in employment income, so I'm assuming you mean if it paid more than $1 million in employment salaries, is there a program available for them yet? Absolutely. The CEWS is available to you, provided that you meet the revenue drop test. If you do not meet the revenue drop test and you've got $1 million of employment salaries being paid, yeah, no, you know, it sounds like you're likely doing all right, and no government support is available to you. Am I wrong, Carol?
No, that's what I'm hearing.
Okay. So the CERB still doesn't cover owners who have paid themselves 0 so far, correct? We've been paying expenses but can no longer afford to do so, but this is not income or dividends. Correct. So the CERB required that you had to have paid yourself $5,000 in non-eligible dividends or salaries coming into the application or during calendar 2019. If you haven't, you know, so there's a question there of, you know, talk to your accountant about 2019 dividends and if your company has the ability to do so. But the other thing that comes to mind is the changes, you know, if there is $1,000 a month being paid, so, you know, there's a potential to pay yourself $1,000 dividend for March now based on Prime Minister Trudeau's announcement today, or a $5,000 dividend for March, I suppose, but that might be considered retroactive. And so, you know, you just need to talk to your accountant about that. But the announcement today came that if you're earning $1,000 or less, you should be eligible for the CRB, but you definitely need the $5,000 of previous income coming into it to be eligible. And so, no, the program, if you've earned 0, would not help you. Can my staff work some reduced hours, say half-time, and be paid 75% of their salary fully covered by the CEWS for them financially? Would this be better or worse than EI or CERB? Carol, I'll let you take that one.
So the short answer is yes. Under the rules, you're going to pay them. You've been topping them in more because they have lower hours, but you're giving them more pay. Should be qualified up to that $847 a week for the 75%. Now, would EI or CERB be better? Now, I guess to me that's going to depend on what that pay is.
What the baseline remuneration is, right?
Exactly. I mean, I'm just doing math in my head. $847 a week. 4 weeks of that is $3,200 over $3,300 in a month for 4 weeks. CERB's $2,000. EI might be 847.
Well, I think EI's been rolled into CERB, right? So
it has been. I'm just thinking what the old EI would have been. So it's going to be CERB or the pay you give them with the 75% top up. And so now I think we're back to the math of what's the actual pay per employee.
Yeah. So what's the baseline remuneration? If $847 is 75% or less of baseline remuneration, you could put them down to that and be fully reimbursed under CEWS, and it will be better than the CERB. If the baseline remuneration for that employee is $750, and you bump them down to 75% of $750, whatever that is, what's the math on that?
562 all around it.
So that would still be better than the CERB. So if their baseline remuneration is 700, like what's our break-even point here? 650? So if their baseline remuneration is, let's just say around $650, and you pay them 700 or 75% of that baseline remuneration, they're better off on the CERB financially. But there's other, that's better for them. Then you have to consider, do we want to keep them employed? Do you want to have to deal with rehiring them, et cetera, in the future? But again, because you got to remember, you have to be out of work involuntarily. So, you still need to lay them off in order for them, or stop paying them in order for them to be eligible for the CERB. They can't just quit and go and get it, I don't think.
Agreed. Right.
Dave. So you're going to have to work with your staff pretty closely on that one and understand their individual math. What is extraordinary items to be excluded from revenue? Jason, great question. We have no idea. Asking if a company has a major drop in revenue from their normal business activity. Oh, we already got to that one. Thank you. Agree. Probably not eligible. Sorry. We're back into still not clear. I pay myself a weekly salary. Must I formally lay myself off in order? No, you don't lay yourself off to be eligible for the CEWS. No, there's no one. You can't lay yourself off if you own a business. That's not available to you. Two, the CEWS is for employees of the company, not laid off employees of the company. And so if an employee is laid off, you will not be eligible to claim the CEWS for that employee, including yourself, if you could lay yourself off, which you can't. So no, stay on salary, weekly salary, and claim the CEWS. No need for a layoff there. Okay, so let's see here. We got a few more. Try and get through them. For CERB, when they say eligibility is now open to those making less than $1,000 per month, does that specifically mean salary only is less than $1,000 a month, or if the business PC is making over $1,000, does that disqualify? I mean, this would be an individual level, I think. Carol, do you have any thought? The question is, what if my company's making more than $1,000 a month? Would I personally still qualify for the CERB?
Devil's in the details, and we haven't seen them. So we've
Thank you, Carol. Thank you.
Yeah. So you know what? I'm going to say I'm surmising. I have my thoughts on that, and I think it's the pay, but I can't justify that.
Right. So your thought is it's going to be at the individual level, not at the company level. But again, devil's in the details. A lot of these announcements that come through sound great, and then we get, for example, this weekend, 5 pages of definitions and 7 pages of legislation to do with the Canadian Emergency Wage Subsidy. So we really need to see the details of the announcement of the $1,000 before we can make an opinion on that. The wage 75% will be taxed as income to the company. Yes. The government wants you to try to pay 100%, but if you are unable to pay anyone any more than the 75%, how is it determined that you made an attempt to pay the 100%? Craig, great question. We don't have, you're going to have to make an attest. So when you're applying, and I don't even know, based on the legislation, I don't even know if that's going to be part of the attest anymore. And so the answer is we don't know. Do we know, Carol?
No, you're right, Clay, we don't. My suggestion in these cases has simply been to keep notes as to what's happening. I mean, a lot of times the accounting figures will tell the story, but we suggest in some cases keep yourself a bit of a diary or notes. And I honestly don't know if that will be required in the future. I I'm a big fan of contemporaneous documentation.
It's pretty
Here's what's
bloody
happening.
subjective. It's pretty subjective, you know, like I have my cash flow needs. This is what I estimated. I don't know how they're going to enforce that one. And I'm not sure that they're intending to, frankly. They just mentioned that this is going to be largely on the honor system. So that might be where that comment is coming from. Hi, Clay. I made a note from your first webinar about special programs coming for owner managers. Any update? Just the stuff on the CERB that we announced today. Non-eligible dividends are A-OK, other than we haven't seen legislation for that yet. And second to that is now the $1,000, up to $1,000 a week worth of earnings apparently are going to qualify. Devil's in the details. We need those details. So those are the big ones that we know of so far. For period 2, the company has to pay the employee 14 consecutive days to be eligible for the claim, the wage subsidy, and if the employee has selected or has collected the CERB for that period 2, we can't claim the the wage subsidy. Correct? Correct. But you know what we think is going to happen, like the way that the legislation is structured, I think, and I've had some pretty interesting chats with some really great experts online about this, and there's been an email received back by one of them that he won't share with us, but it is from a top-level government official that basically you're going to be eligible for the CEWS, and the employee is going to have to get that CERB money back to the government. So that's effectively how that's going to work. We don't know the mechanism for that yet, so expect to see that coming, because that is how it's designed to work. Okay, Roxanne, if you don't have to submit CPP and EI withholdings, does this ultimately impact the CPP for the account for the future pension? Great question. So the way that the legislation is, so I'm assuming that you mean if the employee is furloughed for a week, staying home, not working at all, and the government's paying 100% of your CPP and EI. Carol, do you want to take that one?
Yeah, thank you. My understanding, and I say my understanding because the legislation's a little bit light on the details here, is that this is a payment mechanism. It's a cash return, if you want to put it that way. Back to my example before of I should have paid this much and then I returned it to the company. CRA is saying you should have paid this much. We're going to give you that cash back. So my understanding, to cut to the chase here, is it should not affect the employee's required source deductions or CPP pensionable earnings or payments. Right.
It's being paid. It's just not being paid by you. It's being paid by the government.
Clay, that's a perfect summary. Thank you.
Sounds good. Okay. Sharon's back with the CEBA question. She was denied her application for the $40,000, and she believes that she meets all the criteria. Interesting. We've had a couple of clients with that scenario. One of the ones that I can think of is a good friend of mine and a really great commercial real estate agent in town here, who originally, when he incorporated his company, it was a holding company. And he was denied on the basis that it was a holding company, clearly not a holding company anymore. And I thought, oh, shoot, did we file his tax return wrong and forget to change the NAICS code on his T2? So I went back quickly and looked at the T2, and no, sure enough, it's been updated appropriately. So the CRA should know that it is not a holding company anymore, although it once was. And he was denied on that basis. You need to work with your banker to iron that out. The unfortunate part about that is a lot of banks are sending out messaging saying, don't contact anybody at the bank about this. This isn't our program. We're just the vehicle. And so I think if the bank is delivering funding, you need to talk to your banker, and you need to push back against that messaging that just says we're going to absolve ourselves from any mistakes or screw ups in this program. It's like, no, you got to help me out here. So I would get in touch with your banker, and because they should have, if they denied you, they should have provided you, Sharon, with pretty clear reasoning why they denied you. And so you should be able to go back and either change your application, reapply, talk to your banker, whatever. So what happens if you're operating a partnership and do not file T4s and just do T21, 25 on your T1? Sorry, that's not employment income, that's business income. You do not qualify for the CERB. You do not qualify for the wage subsidy. Or sorry, did I say CERB? The CEBA. You do not qualify for the wage subsidy. maybe you qualify for the CERB. You got to look at the other criteria there. So partnerships, personal partnership unit holdings and business income distributions would not qualify. Carol, am I right on that?
Totally right.
Okay.
Yeah.
My associate optometrists have always been considered independent contractors, not employees. Could we consider hiring them as employees in the short term to take advantage of the CEWS to replace their lost income? The challenge with that is under the lesser of test, their baseline remuneration is going to be 0, which will be the lowest of the lesser of tests. So I don't think that works. Originally, when they announced it, they said you could do new hires and qualify under the program. But looking at the math, that's an interesting question. Carol, do you have any thoughts on that?
No, that would be my concern. Now, there still is the point of remuneration paid. I mean, the one test is remuneration paid or the baseline, which is less. So that test is going to be 0 because of no baseline remuneration. Or the test of the 75% of the amount paid up to a maximum of $847 a week. So I think if you hire on someone, the most you're going to get is the $847 a week or 75% of what was paid for that new hire. You can't get full coverage.
Right. Thank you. Yeah, that's a great answer. Now, when you do that, there are other issues that you need to consider. If you had an employee that you used to call a contractor and you're just hiring them and the nature of the relationship hasn't changed, other than they're now an employee, were they an employee all along? And do you run the risk of having owed remittances for them for all those years? That's a consideration there. So, and then furthermore, to flip them back to contractor afterwards from being an employee, are they actually a contractor? Remember, just because you've got a piece of paper that says I am a contractor written on it does not make you a contractor. For the purposes of employment versus contractor, which is a whole important discussion to have when you're thinking about this, if it looks like a duck and it quacks like a duck, it is probably a duck. And so if you're just calling an employee a contractor for the purposes of not having to do source deduction withholdings, et cetera, there can be pretty stiff penalties for that. And so, you want to think about that stuff as well. Where are we here? Okay, we'll do a couple more. They just keep pouring in, which is awesome. Just to follow up, the payroll account was set up in mid-February and I paid myself on March 1st. You should be good. Yeah, you should be good.
Yeah.
I know we talked about that one. And so, if you wrote yourself and received a check on March 1st, you should be able to calculate baseline remunerations 2 weeks, March 1st to March 15th, and you've got access to the CEWS provided that you meet the revenue decline criteria. Roxanne, are there limitations on students applying for the CERB? If a student has filed an income taxes and meets the 5K requirement, are they still eligible for the CERB? Yeah, I can't imagine why not. They had to have, one of the requirements right now is that they had to have lost income in order to qualify. Mm-hmm. And so if I guess in this case, a student maybe wasn't making any income and so they didn't lose any income due to COVID. Would they qualify? The Prime Minister made an announcement this morning that there's something coming for that. As of right now, I don't think there's anything. Carol?
No, you're totally right. There's a promise, but no details. You're right. If you had a student who did not lose work, they simply weren't working. Right now, there's nothing through the CERB, but we're waiting for details.
If I'm paying myself for my corporation less than $1,000 a month, can I apply for the CERB even though my corporation is earning $1,000? Yes, I think so. Devil's in the details. We need that. We need those answers in. But broadly speaking, I don't know. I can't say yes, but I think you're going to be okay. We need the details of that program first. The Prime Minister announced this morning. I have other employees, but January 1, 2020, I went to salary. Will my salary be eligible for the 75%? Yes. If you've been paying, your salary will be eligible for the CWS provided you meet the other criteria of the program. I've heard talk of the CRA refunding GST installments. Do you think that that's a possibility? That's a good Carol. Carol, help me out here.
I would like to. I've not heard about that. Certainly. Tax payments are deferred, but I've not heard of any refund of currently made installments yet. That's interesting.
Like, I think the Conservatives were they were pushing for that pretty hard. So the reason that they were pushing for that is because it wasn't there, and I haven't heard anything change. So,
no.
Okay, Craig, is the $1,000 a month? Oh, this is a great question. Is the $1,000 a month of net income or gross income? I'm assuming, Craig, that you're making business income, which you report on your T2125, or rental income or something else. Is it gross or net? Yeah, great question. I have no idea. That's going to have to come out in the details whenever this is announced, right?
Mm-hmm.
Yeah. How do we prepare for the application process? Jim, great question. I'm sorry we haven't addressed this already. The CERB can be applied for through my business account. There's a link on our website. The CEWS will be administered and applied for through CRA My Business account. Again, a link through our blog. Please go and see our blog and get the link from there.
Mm-hmm.
Okay, can a company claim a wage subsidy for a subcontractor? No. Is the 40K loan only for payroll purposes? No. So first of all, I haven't seen the laws to do with the 40K loan, so all we're really seeing is what's on the application forms, and those have been varying wildly from bank to bank. So the CEBA application, the ones that I've seen have broadly said you have to use it for working capital, basically, and you can't give owners a raise with it. So, you can use it to pay owner salaries, as long as they're regular owner salaries. You can use it to pay interest on your debts. You can use it to buy inventory and other, working capital type needs of the business. What you can't do is say, hey, here's 40 grand, I'm eligible. I don't really need it. Remember, there's no revenue decline test for the $40,000. So, it's pretty broad who can apply for it. And I'm getting 10 grand off. Clayton just got a raise. All right. We're not going to Mexico anytime soon, but you know what I mean? You can't do that. So it's got to be for working capital in the company. Mm-hmm. Agree, Carol?
I do agree. Yeah.
A couple of the applications
have said that.
Sorry, go ahead, Carol. I'm sorry to interrupt you.
Yeah. I said a couple of the applications I've seen have had a small definition. You can use it for, work now. You can use it for rent, you can use it for other salaries, you can use it for your salary, so you can't give yourself a raise. I'll leave it at that.
Well, I think that's time, and the questions have stopped pouring in, so I think we'll leave it there. We will get you out an email with a link to review this afterwards, and then, of course, visit our blogs if you want any of the information that was in the slides there. It's all on the blogs. And feel free to reach out to us. You can get a hold of us. You already obviously have my email address because you're on this webinar, but also our phone number here at the office is 403-271-3106. We're here to help. We love entrepreneurs. We got a few more questions pop in. Let me just see. If small corporation employees, members of the families of the owner, do family members qualify for the CEWS? Yes. You still have to meet the basic reasonability test for the salaries. So if you're paying somebody who is not working in the business a salary, that you're not eligible to pay them a salary, let alone claim the CEWS on that salary. But if you're paying family members, yeah, they'd be eligible. They'd fall under the non-arm's length rules. One of our full-time salaried employees also worked part-time prep cook. He is applying for the CERB to make up for the loss of income as the restaurant is closed. How does that impact us for the 75% wage subsidy for his full-time pay under our company? So if you want to reimburse him his full-time pay, you'll get 75% back up to a maximum of $847, and he is not eligible for the CERB. He will have to send the money back. So I don't know if that answers your question. If he's currently, under the current law, if he's working at all, he's also not eligible for the CERB. So that could be an hour a week. And so under the revised law, if he's making less than $1,000, he would be eligible. Great job, guys. Super helpful, informative. Great. Thank you, James. Okay, guys, I'm going to leave it there. If you got any questions, follow up with us.
You bet.
Bye for now. Thank you, Carol.
Lots of fun, Clay. Take care, everyone.
Bye for now.